What's going on, guys? Welcome back to another episode of Hustle with JesseW, and today we're going to go over a video you guys have been asking me to do for a little while now, how I trade options. Check it out. Alright guys, so let's go ahead and jump into this video. And what we're going to do here today is we're going to go ahead and apply the SPY, which is very volatile today, onto options trading. Now, there might not be a live setup here that we can go over, and if there is, I'm certainly not going to actually take it with live money, because recording kind of like a lesson video while taking the actual trade is something that's going to mess with my concentration, so I'm not going to do that. But we are going to go ahead and jump in here, and I'm going to show you step by step the thought process and how I plan out an options trade, okay? Because I know you guys have been asking for it for a while now, and I've been wanting to work on that video, and I've been working on it with notes and such, but I haven't actually shot the video. I shot one a little while ago, but I didn't like how it came out, so I went ahead and deleted it. And now here we are. We're going to go ahead and jump into this one, and we're going to go step by step on how I would enter an options trade here. I traded the SPY today, and I traded it via options, obviously. SPY puts, real nice day, home run day. It was like about a $600 trade. I was down on the day to start, so I wound up making a little bit over 400 bucks. But hey, 400 bucks in one day, I'm happy with that. I mean, if I could repeat that every single day of the week, money. But that's what I did today, and I'm going to show you. It's so easy, guys. This is ridiculously simple, because you know that I like to keep my trading simple. I don't like to overcomplicate almost anything in life, because when you overcomplicate things, you start to feel like you're drowning within it. It starts to get overwhelming. You start to feel like you can't figure it out. And then what happens when somebody can't figure something out? Generally, either you push through it and make a mistake because you're flustered, or you just quit on it. And I don't like to do either, because if I make a mistake, then I either got to figure out a way to fix it, which takes much more time, or if I can't fix it, I got to find somebody to help me fix it. Or worse yet, if I quit, then I'm left with the what if. And you know I don't like what ifs. I like to, jump out there and take my leaps and find out what happens. That way I don't have what ifs. So I like to keep my trading as simple as possible. And you know that like intraday, I use VWAP and 90MA along with daily levels. And that's about it. And fib levels every so often. But I don't overcomplicate myself, right? Volume, VWAP, 90MA, and just levels. That's it. And the same I hold true for the options trading. Now, when I trade options, I'm not looking at the chart. There are charts that show you how the option's moving. I'm not looking at that, okay? I'm not really concerned with how the option itself is moving within a chart, because I trade the option kind of like as just like the vehicle for the underlying equity. So in this case here, this is what would happen. I would trade the SPY in this fashion. But before we continue moving forward, make sure you do me the quick favor, smash the like button for me, subscribe to the channel, and let me know what's the next video you'd like me to make. Drop it in the comment section below. Right now, it only takes a second, and that way I can start working on it and get that video together. I do have another video I'm working on, which is how to trade low float stocks. And I'm going to get that one to you very, very soon. But I wanted to bring this one first because you've been wanting it for a while now. So SPY here opened up, it was real choppy. So in this case, I'm looking for further downside on the SPY, because yesterday we closed down 1,035 points. Today we're down a little bit over 250 points right now on the overall market. So right now I'm looking for further downside on the SPY. Okay, that would be what I would do, and that's what I traded today. I would initially take a starter entry right here underneath VWAP, okay? And it would be via puts. Now, Jesse, how would you pick your puts? Very simple. I come over here to my options chain on E-Trade. It's the same thing on any broker. You look for your options chain and you'll be able to see it there. I'll type in SPY. It's already there. But you know what? Let's start it from scratch. So I'll type in SPY. Boom. I come in here. I'll put puts because that's what I'm looking for. And now I'm going to look for the closest expiration date. Why the closest expiration date? Well, because the further out the expiration date, a number of things, the more expensive the contracts are, and the less volatile they're going to be. Now, if you want it to be less volatile, by all means, go further out, go a week out. A lot of people trade week out options because they're less volatile, and it gives you a lot more time to let the trade work itself out. If it gets away from you, whatever happens, you have more time to see what happens. So in this case, today's the 25th of February. This is the 26th, is the very next expiration date. Yesterday was the 24th, obviously, and I traded same day expiration options. And you saw in that video how volatile and mean those options were. The time decay was extraordinary. Time decay is, you have two types of value in your options. You have whether it's in the money or not, and then you have time value, okay? The more time away from the strike price you have, the more time value you have. If they expire today, as time progresses throughout the day, the more you lose time value aggressively. So that's why same day expiration dates on something like the SPY, when it's volatile and making dollar moves, is insane. You can lose 80% of what you put in like this. Like you could be up 100, 200, 300% like this, and you could be down 80% like that. It's very, very risky. So one has to go into it knowing your size. If the option is $200 and you don't want to risk more than $100, I probably wouldn't take more than one contract. Okay. But that one contract could make you $400. You know, it could easily make you $400, or you could lose 100, 150 like that very fast. So it's something that one has to keep in mind when they enter these type of aggressive trades. These are just as aggressive as small cap low floats, if not more so. So in this case, I picked tomorrow's expiration date. Boom. Okay. Well, in this case here, we were looking at 323 was this pivot. And, you know, I was thinking that we'd get down to 320s. So I want to be in the money on these kind of quickly. So what I'm going to do is I'm going to pick these 322.50 strikes or 322 strikes. Now, obviously, when I put these up here now, the price that you're going to see on there isn't going to be the same price they were here, because they're well into the money now, because the SPY is going off at 319. Okay, so you would come here and put 322. Boom. And those are going off now at $3.80 something cents. I think they were probably going off like $1 something here, maybe $2 and change. I really don't know. And that's how you would pick your options. Now, if I were to pick something right now, I would prefer this to be up here near VWAP, so I can give you like a live trade example. But we're going to go ahead and say, okay, we want these puts 319s. So we're closer to in the money, but we're still out of the money. So right here, 221s, right? 221, 225. That's a real nice tight spread, not bad at all. You would, you know, probably get into those and see if the SPY is going to come back down to test a low of day. That is the ideal scenario. Where would my stop be? Well, my stop here would have been right above VWAP, very tight stop. I probably wasn't going to lose a whole lot if that went against me there, but you know, that's a very tight stop. So I would have gotten some size on it. How much size? It depends. I don't know what they were going off at that moment. Maybe 10, maybe 12, maybe 15 contracts. Okay. Now here we said we were going to get in here at 225, right? So far we're up. Let's see how this moves and how the price moves along with how the underlying equity, in this case the SPY, moves. Let's see if I can zoom in a little bit here. I generally like to be like, you know, a little bit out so I can see the bigger picture, but we'll zoom in a little bit here just for the video. And we want to see this now crack under this 90 EMA and break underneath 319. This is exactly how I would trade this. Preferably, I would prefer tested VWAP and rejected. That would have been my actual entry. I would have probably never entered here, but just for entertainment purposes of the video, we'll say we entered here. And this would probably be a failed trade just because it's not a real clean, clear setup. You can see how they're at 218 now. You know, as the SPY bounces back up here, these are going to start to lose value quickly. Okay, and that's why one would have to keep their stop tight on something like this, especially on a bad entry. So my stop here would be the high of this candle, which would be 319.76. Now, like I said, I would never trade this here, but we're making the video and I want to show you something live where you could see the value of the options move around live within the same contract we chose. Okay. Ideally, like I said, I would want a VWAP rejection, then I would enter potentially the puts here using this 321 as my stop. See how it's bouncing back up? Look at these. They were at 225 a second ago. Look at this. 209 already. They move around a lot. Look at this. 208. They move around a lot. So size is extremely important when it's very volatile like this. You don't want to be oversized. You don't want to say, oh, it's just $2. I can buy 10, 20, 30 contracts. No problem at all, right? You can lose 50% or more of the value like this. And then you freak out and you stop out of it. Okay, that's what happens. You'll freak out and snap out of it, and all of a sudden you'll have the SPY come up to VWAP, reject, and then come back down and make a brand new low of day. So the proper entry and the proper size is paramount to your success when you're trading options. And this is the same when whether it's Tesla, whether it's Shop, whether it's SPCE, whether it's Roku, whatever it is, NIO, that's like a $4 stock. I think it has options. So you have to just be mindful of your size and the volatility of those options. Look, right now, bang, they're right back at 220. All of a sudden, a little while ago, you were down at 208 on the bid from your 225 entry. They move around. So you have to be mindful of that. And then that's exactly how I trade it, guys. I try to pick an expiration date that's pretty close because I'm not swing trading it. Generally, I'm day trading it. So I like to pick the closest expiration date possible. And I like to pick a little bit out of the money, but I need to make sure there's volume and they're being moved, they're trading. Because sometimes you'll pick an option and they're not moving. Like there's no volume on them. You don't want that. Like I don't want that generally, right? So you want to make sure they're moving, that there's volume in there, okay? That they're being sold and bought. You need to have liquidity, in other words, in those contracts. Otherwise, you can get yourself in a lot of trouble real fast, and you won't be able to get out of it. So you want generally to, enter proper, have the right size. I personally pick the closest expiration date possible, and I also pick just outside the money, depending on the volatility of the stock, obviously. Like for instance, Tesla, when I traded those options, I would pick them sometimes $3, $4, $5, $6, $7 out of the money. But why? Because Tesla moves $10, $20 at a time when it was in play, hardcore, right? So I'll pick them outside of the money, but not extraordinarily outside of the money, generally speaking. Okay. And that's it. It's very simple, guys, and I trade it with this. Like I don't set my stop, generally speaking, ever on this, on the actual price movement of the option. Like if I'm in at $2.20, my stop's not $2 or $1.99 just because I don't want to risk more than 20 cents. No, my risk is based on the chart of the actual equity that I'm trading, be it the SPY, Tesla, Shop, Roku, NIO, etc., etc. It doesn't matter. Right? If it's JNUG ETF, NUG, it doesn't matter. Whatever it is, I'm trading it. I'm trading those contracts with a stop and targets according to the underlying equities chart. You thought it'd be more complicated, right? But it's really, really, really not that complicated at all. I really don't know what else to go over with you here other than those key things: proper size, proper entries, proper stop zones. And stay true to your stops because it can get ugly very fast. But just like in small caps, you gotta watch your size, you gotta enter proper, and you gotta stick to your risk reward and your stops. Otherwise, it can get ugly real fast, and you can become a bag holder. The good thing about, like, let's say options here is that if you're in a short on an actual stock or an ETF, like that can go up and up infinite, and you can, if your short is like a value of $5,000 that you bought into, and all of a sudden, or you sold into in that case, and all of a sudden you could be down $10,000 easily on a short because it can go up forever. But with options on puts, let's say I bought $2,000 worth of puts and the stock just goes up infinite. Well, my values will go to zero. I mean, my stocks, my contracts would go to zero or $1 or whatever. I'll lose only the maximum of what I put in. So it's pretty cool in that sense. It's pretty safe. I don't like to short anything usually overnight. I don't think I ever have because I'm afraid of some crazy PR the next day and it just gaps up infinite and it blows me up. So I've shorted stocks and ETFs like SPY via puts that control my risk, right? That's it. Oh, look at the option. See, we're getting a little dip underneath that 9 EMA and they were going off at 230. Okay. I mean, we can run this video for a while and see if it breaks under 219, but you get the gist of it all. You should understand now how I trade them and how I formulate my plans, how I'm mindful of my size, my entries, and my stops. They're all based under the chart of the underlying equity. That's it. If you see my recaps, you see me talk about how I'm trading here, I'm selling there because of this level on the daily or this level on the intraday on the actual equity itself is chart. So that's pretty much it. Look, let's see if it's gonna break this 319 real quick. Nah, it's still fighting there. Like I said, this is not a proper entry. I just wanted to show you guys like an example so you could see how the actual contracts itself would move around as the price action of the SPY itself moved around. But that's it for me. Let me know what you think. Let me know what you want the next video to be, apart from the low float, how to trade low float stocks. That way I can work on that for you. Make sure to smash the like button for me. Subscribe to the channel. Remember, when we hit 10,000 subscribers, we're going to do that free trading account giveaway. Remember, link in the description section below for Webull. You download the app, you fund your account, you get 2 free stocks. Free stocks equals free money. I mean, if you don't want to keep the stocks, you sell them, and then you go out to lunch or breakfast, or I don't know, go buy something, right? Or smart, invest the money. That's way smarter. Smash the like button one more time, and I'll catch you on the next one.